Okay, hello traders and welcome to live trading session video. It's Stu Naupan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So today's session on our live trading session is going to be on reward to risk ratio. I wanted to really listen up on this because it's not the conventional reward to risk that you have probably learned, which is your expected reward to risk. But we're going to go much more into detail into the other aspects. So let's go on to the screens and let's also take a look at how the markets are doing as well. So as you can see over here, let me just bring up the GBP USD chart over here on the 1 hour. So you can see that from our previous videos, if you've not been following, I would highly recommend you all to go and look at that as well. We talked about the stretch and how to use the stretch to actually plan your trade, as that's how actually a bar actually forms. Right. So now, based on all of this, let's take a look at today's topic on reward to risk. Okay. You see, if for example, firstly, to calculate reward to risk, your entry point, okay, your entry point, let's say it's above the stretch level. And you see, I just remembered as I was just talking about this, actually, this topic, reward to risk, is actually also covered in our Trader Starter Pack video series. So remember that. And also another thing also, we do have our one-to-one coaching session where you can come to, where we can also tailor actually strategies to your trader type. For that, we have designed a trader personality test that you can take with us. Also, we'll give you a free video course as well that suits your trader type. And also, you'll be trading live with us to learn strategies that take 15 minutes per day. All right, so you can go ahead and click on the link below this video and you can go and book your session with one of our trader coaches, where we can also take you through any of other questions that you may have to serve you to our best service. Right. Now, coming back to here, so you can also see that over there on the video course as well, on the reward to risk ratio. But let me get in a bit more deeper today. So let's say you wanted to enter here, and let's say your stop loss was all the way over here, your ISL, initial stop loss. Some of you might say, hey, Thiru, that's quite far away, you know. So therefore, my trade risk is quite a bit, right? So let's see from here to here, that's about 43 pips of risk is what we are doing, okay, trade risk. So therefore, what I'm saying is, if let's say we risked 10 pounds a pip, that's 430 pounds. All we are saying here is that to make 430 pounds, that's one-to-one reward to risk. It's got to go 43 pips of reward. Okay, so that's the thing. Yes, some of you may argue that, okay, but doesn't matter how far the initial stop loss is, but I can do 1%, I can reduce this, I can put 1 pound a pip, make it 43 pounds. But regardless, the point remains that it's got to travel 43 points to make at least one-to-one. Okay, that's point number one. Point number two, traders. So point number one is the exact meaning of what is reward to risk, okay? Even if the trade risk is far away. Because of that, some traders might argue and say, hey, then why didn't I put my initial stop loss that far away? Why did I make it tight over here, okay? And make it only about 20 pips of trade risk. And then all I need to do is just make 20 pips of reward and I make my one-to-one at least. So that's another way that people can argue. But you see, the real answer to all of this is neither way is wrong or right, okay? How do you then see which is one you need to follow? That's the second part. The second part, what you really need to look at is what we call the actual reward to risk ratio. Actual reward to risk ratio. Your first step was here, this reward to risk ratio is called expected reward to risk ratio. It's not your realized reward to risk ratio, it's expected. See, for example, if I enter here, my initial stop loss was there, 43 points of trade risk. Expected, that means I'm expecting it to go one-to-one, okay? Whether it gets there or not is another question. That's when it comes to actual. And let's say if you took 20 trades like that, with 43 pips or 1-to-1 reward to risk ratio expected. But let's say traders on actually what happens is out of the 20 trades, let's say 20 trades, you got 15 trades getting to 0.7 of percent profit, 0.7 of the 1%, or we can say 0.7 of the 43 pips. That means about 28 pips it gets to, right? About 30 pips, whatever. So 15 of them did that. Let's say the last 5, they made you an average loss of 0.5% because of your trading stop loss mechanism and all that. And then it comes to 0.5%. So you can see what is the actual reward to risk ratio over here. On an average, the winners made 0.7. On an average, the losers made 0.5. So actual reward to risk, 0.7 divided by 0.5. Actually, it's even more than 1 to 1. Actually, it's about like 1.1 or 1.2 to 1. This is what we call actual reward to risk ratio. So you see the conventional thing, the myth of, oh, expected reward to risk ratio, if the strategy is only like 1-to-1 or 0.5-to-1, I'm not going to do such strategies. You shouldn't think like that. What you should be really looking for is your actual reward to risk ratio. How is it performing in real time? And what kind of gauge is it giving from historical testing? The last thing that you need to do after you've done 1 and 2, number 3 traders, what you really need to do is you need to find out, okay, that's all good actual reward to risk, but cumulatively, what is the net profit or loss of that strategy? That's what you should be looking at, okay? The net profit or loss. So what do we mean by that? You see, even though the actual reward to risk ratio might be 1.2 to 1, but if only 20% of them only win, then as you can see, the total gross profit is only going to be about like 24%, as compared to 80% losing times 0.5, that's about 40% loss. Therefore, you might end up in minus 16% loss, okay? Total net loss, okay? This is gross loss, is gross profit. So that's why eventually what you really need to do is to find out your total gross profit and your total gross loss to see whether it's a net profit or loss strategy. Okay, that's the last thing you need to do. That's why we say cumulative net profit or loss. If let's say it was an 80% winning strategy, then that will be what? That will be 80 times 1.2, that's about 96%. And 20 of them losing 0.5, that will be 10% loss, gross loss. 96 minus 10, that will be 86% net profit. Okay. So I'm just giving you an example. So these are the 3 things that you need to do, okay, with any strategy that you're doing. So in terms of reward to risk, first of all, know that firstly, what is the expected reward to risk when you start off? 2, the actual, and 3, finally, your cumulative net profit or loss, okay? Right, I guess that's pretty much what I wanted to tell you on this session over here. Just a quick look on the 1 hour time frames on the GBP USD. Over here, it's gone below its stretch, so probably the BRO is going to form towards the downside today. Dollar Swiss, on the other hand, just a very quick look over here to the upside. Probably today the BRO stretched to the downside, as you can see. And finally, just the last very quick one on Euro Dollar. You can see that the BRO is probably to the downside today as well, and a stretch to the upside. Okay, I guess that's pretty much what I wanted to show you as for today. So reflect on what we have talked about today in reward to risk and integrate that into your strategy. All right, just a very quick thing that I just remembered also is, remember to, let me just share my screen very quickly again. Remember also about the one-to-one coaching session. You can click on the link below to register it, and we can go through all these 3 things with you. Trader personality test, a free video course that is tailored to your personality, and finally trade live with us as well. Okay, so a lot of value there, so you can go ahead and click on that link over there. And the other thing is, don't forget also that if you want more notifications of videos like this that we are doing over here, you can always go ahead and hit the subscribe button on the video just below this video where there's a subscribe button. All right, that's all I wanted to tell you for today. Integrate it, reflect it, use it in your strategies, and go forward with absolute gusto. All right, as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.